Hi, so in today's video, I'm going to talk to you guys about the Wright Momentum portfolio. The Wright Momentum portfolio is one of the most popular strategies by Wright Research on small case. Momentum strategies, are the best performing themes for the current market. We have seen a bullish market in the last year, and we see the strength of the market to continue going on in the future. So after coming back from the August correction, right now is the perfect time for somebody to invest into the momentum portfolio. In this video, I will explain to you what a momentum portfolio is all about, the nitty-gritties of it, and why it is the perfect time for you to invest into this portfolio right now. Right. So before we get into the details of it, let's answer the basic question: what exactly is momentum? Right? So if you have some knowledge of physics, in physics, what momentum is. It is the tendency of anything that is moving at a rapid pace to continue moving, right? So that exactly is the phenomena that we are trying to address with the momentum portfolio. With the momentum portfolio, we expect any stock that has been trending at a rapid pace to continue that trend at a rapid pace in the near future. So it is simply following that trend and participating in that trend. This strategy is not, one of the fundamental strategies where you are, analyzing the balance sheet and income statements of the company to, ascertain the value. But here what we are doing is we are betting on investor behavior to participate in this particular strategy. Right? So investors like you and me are not always rational, right? There can be a particular news due to which the valuation of the company can change, from a particular value to a higher value. But not everybody understands, or bets on that valuation change to actually happen whenever that news or event comes. And there is initially a slow underreaction to that particular news that comes up. Maybe certain investors who understand company, they start buying it, but not everybody participates on that trend to take the value rapidly to a higher value, right? The trend starts slow, and as more and more people climb onto that trend, the trend continues at a rapid pace. Eventually the trend reaches the upper limit where the price becomes overvalued due to the herding of investors, and that is when the trend ends. Now this a momentum strategy is actually trying to capture these trends. What we are trying to do is we are trying to find out the presence of such a lasting trend in the stocks that we are looking at, and we are trying to participate in those trends. It is obviously a little bit counterintuitive to the knowledge that comes from a lot of analysts and investors who talk about valuation and the intrinsic value of a company. But if you do the analysis of these particular strategies over decades and decades of data, you'll find that this is a very strong strategy, not just in India but globally, that performs really well. And talking about India, at Wright Research, we actually do study a lot of fundamental strategies as well. But in a country like India, a momentum strategy is actually one of the strongest factors that there is, right? Because Indian markets have gone through this sustained bull markets, over our history. Momentum or trend following is actually worked really, really well in the Indian markets. And that is why we bet on momentum. We bet on momentum doing really well into the Indian markets. So having talked about the theory of momentum investing, let's understand how the momentum portfolio is made and what are the salient features for you to know about this portfolio, right? So how we create a momentum portfolio is purely in a data-driven fashion. So we have our algorithms that look at data and select the stocks that we offer to our clients. Here, how what we are doing is that we look at the top 300 stocks with market capitalization as a universe, and we rank these stocks based on various trend factors. So the trend factors that you can be looking at could be, maybe a 12-month trend of the particular stock or a 6-month trend of the particular stock, maybe a breakout signal that that particular stock has given, it has risen above its high or it has crossed a crucial level. So you rank the stocks based on, we actually rank the stocks based on the multiple factors, and we select the top performing stocks, top ranked stocks based on our list. Again, we are agnostic of any sector, any industry, or any market capitalization. So if in a particular market cyclical stocks are doing well, if metals and infra is doing well, we'll invest into those. If the market changes and FMCG or technology starts doing better than those, then we'll dynamically switch to those sectors. Similarly, when larger stocks are doing well, we'll be investing to larger stocks. But if smaller stocks start outperforming larger stocks, we'll dynamically switch to those. And again, we are very, very aware of the risk. So we create a very diversified portfolio. We do not bet only on one particular stock or sector a lot. We try to diversify across various sectors, and we try to give you the best performance on the amount of risk that you can take with your equity investments. The expected return based on past 8 years of backtest is around 35%, and in the live market we have, like I said, we have given almost 90% return in 10 months, but that is because the market was in a secular bull run last year. This particular portfolio at any given time has 20 to 30 stocks that are there in this. You can invest a minimum of 30,000 rupees in this portfolio and a maximum of up to 20-30 lakh using small case. Our exposure is dynamic. Like I said, we are not focused on one particular sector or industry, but we are looking at the whole universe in the top 300 stocks. There are a couple of versions of this portfolio. You can either follow a fixed fee, which is 1200 plus GST for 6 months, or you can pay 1.5% of the amount you invest on a yearly basis as fee to us. This strategy, we rebalance on a monthly basis. We do not rebalance on a weekly basis like many of the momentum strategies do, because what we think is that what we're trying to capture here is long-term trends, right? So long-term trends, if you are able to capture, they shouldn't be changing on a week-on-week basis, right? So that is our intent, and that is why we rebalance on a monthly basis, and that saves a lot on cost and still gives you a very good performance like we have shown. Now, what is most attractive about this strategy is the performance of it, right? Everybody is why do we have people so much interested in the momentum strategy? Because it has given 90% returns over last 10 months, right? And if you look at the risk of this particular strategy, it is at par with the Nifty index, but still it has given a 50% outperformance over the last 10 months. And if you look at the historical 3-4 years of data, you will see that momentum typically outperforms the market in sustained long-term periods. Over the last 5 years, the CAGR or the return would have been 35% when the market has given 14% return, which is amazing. But again, this is a high risk, high return strategy, right? So when you are picking up stocks that have the highest trend, when the trend breaks at any given point of time, those will just be the stocks that will suffer the quickest whenever the trend breaks, right? So you have to be aware of that. So if you look at the risk scenario, you see that whenever there is a sustained level of risk in the Nifty index, momentum strategy might go down as much as the index goes down. Like I said, you have picked up the trendiest stocks, so they will see the first hit come into those stocks. But this strategy usually recovers faster than the market whenever the consolidation ends. And at Wright Research, we also have a deallocation policy. So what deallocation policy means is that if there is a sustained drawdown in the market, if there is a bear market where investing into any equities stock does not make a lot of sense. So during those scenarios, what we do is we deallocate a certain percentage of your capital from equities and put it into liquid goods, right? Which is a cash-like instrument. So when you invest into a Wright Momentum portfolio, you don't need to be worried about the market levels or should I take out money from the portfolio, because we will be managing that. We will be managing that risk. When we see that the market that there is a correction and we need to get out of equities for a short span of time, we will be taking money out and putting it into equities. And when we see that it is time to come back, we will be doing that for you. Right. Talking about the risk of this particular strategy, the risk of this strategy is almost at par with the Nifty index, sometimes slightly higher. But this strategy will give you a higher risk-adjusted returns for the amount of risk that you take. So momentum strategy is actually, a high-risk, high-return strategy that people talk about, right? So you might be taking a high level of risk with this strategy, but you get rewarded with a much higher return for that particular risk that you take. So if you are able and willing to take the high level of risk that this strategy brings, you will be rewarded with a higher return with this portfolio. Now we reach around the end of this video, where I'll show you what are the current holdings of the momentum portfolio right now. So our momentum portfolio right now is concentrated highly on the technology sector. We have some metals and chemical allocation which are high as well. The topmost stocks in this portfolio are Tata Elxsi, Navin Fluoride, Mindtree and Deepak Nitrite, which, if you are aware of the equity markets, are one of the most trendiest stocks going on in the market. So whereas we do have these cyclical stocks like metals and energy in our portfolio, but we also have the defensive sector like technology that does well even during market consolidation. So this is a very perfect allocation which I think is there for the current market. And with that, let's go on to our small case page and see how the portfolio looks like there and how you can. This is our small case page for the Wright Momentum portfolio. You see that these are the live returns that we have delivered on small case. You see this is the minimum amount that you can invest into this particular portfolio, and the details of the fees are also mentioned here. You can find more details about the portfolio and the methodology, and this blog post about it as well that you can find. If you look at the performance, which is the most attractive piece of this, is that if you look at returns since 2014, you'll see that this portfolio has given a massive outperformance over the equity mid-cap index and the equity large-cap index during these historical periods. If you look at the live performance, you see that this particular portfolio has given 87% return when the market has given 35% return, and even during short-term drawdown phases that have come up in the market, this portfolio has been strong. You can very quickly subscribe to it using the small case page. You click on subscribe now, you fill in the details, you have to sign the investment advisory agreement, pay the fee, and you're good to go. You can invest in a few things. And not just that, at Wright Research, we have completed 2 years on small case in August. And with that, we are offering a 30% discount across our portfolios to new investors coming into these strategies. You can use the coupon code 2 years to get 30% discount when you subscribe to these portfolios in September. Along with this video, we are also publishing a focused blog post about the Wright Momentum portfolio, where we have explained what I talked about in this post, how the momentum portfolio takes advantage of the trending market, why and how you can invest into momentum portfolio. where exactly are we investing and what happens, and what are the risks of investing in this portfolio. And then you can quickly reach our small case page. Do apply the coupon code 2 years, and I hope you are able to participate into the sustained period of growth that the markets are going into right now. And right momentum helps you in your journey of wealth creation in these favorable markets.